Hello there. Thank you so much for tuning in to today's episode of The Business Age on RBA. You'll be with me, Naringwa Fiona Mothoni. On today's episode, we are coming to you from the National Bank of Rwanda. We are going to have a deep dive into the recent Monetary Policy Committee meeting that happened, maintaining the central bank repo rate at 6.5%. We will have a conversation with the chief economist, Dr. Thierry Kadisa, for more. Thank you so much, Thierry, for joining us today.
Thank you very much for the invitation.
We are going to go just right into the Monetary Policy Committee. We saw the decision to maintain the repo rate at 6.5%. Maybe just take us through this decision. What prompted it?
As you know, this is a quarterly meeting that the central bank, through its Monetary Policy Committee, does. So it's look at global economic development, domestic economic development, and new forecast, what do we see for the future. We are focused mainly on the short to medium term, so it means this year, 2025, and the next year, 2026. So based on that, then the Monetary Policy Committee takes decision on the central bank rate. As you said yesterday, it was announced that the central bank rate is maintained at 6.5%. Reasons behind that is the key reason behind that is that what we see for the next 2 years, so this year and next year, is inflation that is remaining within the band. So you know our band is 2 to 8%. We have revised our projections. Our new projections is showing on average 6.5 for this year and 4.1 for next year. So given that this is between within the target range that we have, then the MPC decided to maintain, because what we also do is simulation, say, with this particular rate now, what does it mean for the medium term? And we see that this rate is the right one, or adequate one, to maintain inflation at this level. So that's really the main reason. But of course, we always discuss risks. We always have different scenarios that we run. We always look at different possibilities, but we think, okay, what's the most likely thing to happen? And the most likely thing to happen is, for the moment, the information we have, that inflation remains within the band.
Okay, and take us through, even looking at the headline, but looking at the core as well as the commodity inflation. How are we seeing this looking? How are the numbers?
Yeah, so the numbers for the year, maybe I start with the year 2024 we just ended. We had inflation that was really close to the ideal level of 5%, because we had 4.8, and this for the average for the year, and not only the average for the year, but every single month, every quarter, we're really within the band in the year 2024. That was not the case the previous 2 years. 2022 and 2023 were close to 14% on average, which is very high. So we're happy that we end the year where actually we go back to what we need to have as inflation, which is really close to the 5%. And what we expect is really that this year, next year continues in that trend. So looking at the fourth quarter, inflation was close to 5.2 on average, and it was a bit lower in the third quarter. And so we saw a bit of pressure coming from a bit of core inflation. So we had prices of restaurants and hotels, every end of the year, because of the festive seasons, you have demand picking up. So you have some of the prices that really, these are seasonal, like hotels, restaurants, it started increasing a bit. We also saw a bit increase in some of the fresh food prices, January, etc. So we're in a period where we are close to what we call the planting season of season B, that's going to start soon, and where the harvest of the previous season A is on the market, but is like sort of ending. So we also have a base effect where, as I was saying, when you come from a very high inflation to a very low inflation very quickly, that means that the prices, the level of prices were relatively low in the same period last year, and that's the period we are comparing it to. So when inflation in December starts picking up, and inflation in January also, that's sometimes, like we are in now, reflecting partly what we call the base effect. So the same period in January last year, inflation were coming down from November, we had 9, 6, and 4. So now we are having 4, 5, and 7. So it's like a result of this base effect. But we expect this to be around the same, not increasing above the 8%. And then the second quarter and the third quarter, we have other factors that will drag inflation further down.
We saw last year, especially agriculture, it was a bit, it really fluctuated a lot, and it also mainly because of climate change. We really can't predict how the seasons are going to be, but how are we seeing agriculture faring?
Yeah, so last year we had a very, very good first half of the year, which is one of the big season A of 2024. So you can, if you remember the period of November, December 23 and going on, prices on the market were reducing for fresh food products. And it's partly explaining this base effect I'm talking about, because the harvest that we are having now, so we're not able to sustain these prices, so they had to increase a little bit. But what we are seeing overall for this year, 2025, we are anticipating like close to normal conditions. We've had some weather challenges in September, back 2024, delays in rainfall, which affected some crops. But we do not expect it to have a major impact on prices the way it was in 2023. Where we really saw prices going up as a result of very, very bad season. So that's not what we are seeing. We can have, and there are challenges related to climate. Prices slightly increasing, slightly reducing afterwards, but really more stable than they used to be.
How are we seeing risks within the market likely to impact this, and what risks are we looking at? Could it be the geopolitical tensions that are happening within the region in itself, or even trickling down from global parties?
Yeah, I think it's a mix of all this. The risks for us is anything that can affect our economy in a way that at the end of the day also affect inflation, because that's our main focus. So starting with climate, that I said, we are seeing the impact of some of the, let's say, rainfall patterns in the past few months. Sometimes delaying to come, sometimes ending too early. So all these are affecting some of the crops. But then when you monitor prices on the market, you see, okay, fine, we understand this price of this particular commodity increased. We had, for example, beans increasing at some point. Now I believe it's a bit stable. And we had maize also, which was increasing a bit. The rest was more stable. So what we monitor that even on daily or weekly basis, and we try to see how is the estimated, let's say, supply on the market and so on. So as I was saying, the impact of there's been some issues on weather that has led to slight increase of some of these prices, but we think it's temporary. And we think that with the new season, which will come, the harvest will come around, let's say, end of May or June, then if we have a good season, prices can remain stable for the entire year. So the risk, as you mentioned, is what if we don't have a good season B? That's actually the risk, and the risk will depend on how will rainfall be between now and March, April, where actually from the planting to when these crops will be growing, etc. So this is what we can say as a risk. And beyond that, when we are saying that next year inflation will come down maybe to 4.1, the question will be also 2026, how will the weather be? So again, nobody knows at this stage. And this is why we are having a mix of methods of trying to understand what's going on right now, having an idea of what's going to happen in the coming few months. We have Meteo Rwanda, which is doing a lot of work on even a forecast for weather for the coming 3 months. I think that's what they are looking at. And then beyond that, if this weather, the weather patterns are different from what was forecast, then how will it affect us? So this is the kind of analysis we try to do almost on a daily basis. And we work together with all these agencies, Meteo Rwanda, Minagri, Rwanda Agriculture Board, etc., Minicom. So we are in we have constant exchanges with them to discuss on this. So one risk is the future weather and the impact of climate change. And this one, there are limits to what we can know in advance. Now, the second is geopolitical risks in general, which you mentioned as what's happening in the region, but also globally. Globally, we are looking at international prices, how international prices can move, but we are a bit more, I think the information we have now, we're a bit more stable than, let's say, the past 2 years from a global commodity price environment. There are indicators of geopolitical tensions we look at, indicators of global supply chain. For the moment, everything is quite stable. And oil, which is one of the very important commodity, is stable. One of the reasons why oil is stable is because the demand for China is coming down. In China, people are now using more electric vehicles. And the demand for oil is actually coming down, and China is a population which is, as you know, very, very big. So the global demand for China is down. And the OPEC countries, the main producers of oil, have sufficient supply. They have really enough supply. So on the oil side, it's kind of stable. Actually, we are seeing it coming down slightly in the coming months and so on. So the other markets also depend on climate change in other countries, Brazil and others. If they have a problem with their harvest, then it's affecting the entire food commodities, depending on how big is their supply vis-a-vis the global supply. Here, there are problems here and there, but it's also quite stable. So this is the reason why we think that, and also like the regional geopolitical issues you mentioned, we are not also seeing direct impact on our economy for the moment. So this is why we are saying these are risks, but not part of our baseline. Our baseline is we suppose that nothing else will change there. Now, if one of these risks materialize, climate change, etc., then we need to sit down and assess what does it mean for us and probably revise our projections.
Still looking at that point, we've seen the Democratic Republic of Congo is one of Rwanda's trading partners. And with the tensions that have been happening, have we seen or do we foresee any particular impact, whether it's trade or other areas?
No, on trade, I don't think so. And apart from the few days where there were security issues in the city of Goma, borders were closed for a few days. But apart from these few days, trade is quite normal. And we have a lot of activities at the border. We've been having, this is one of the busiest borders in the world, where we have activities of both what you call a big trade, formal trade, but also what we call informal trade. Informal trade, small-scale traders going between Goma and Gisenyi. And these activities resume. They are coming back to normal. So we do not see any impact there, very significant impact on this side of our trade.
Rwanda's economy shows a positive growth. We've seen a real GDP growth averaging at 9.2% in the first 3 quarters of 2024, comparing to the same period in which was 8.2% 2022-2023. Do talk to us. What sectors are we seeing influencing this?
Yeah, so the first 3 quarters we had high growth, as you mentioned. The sectors, so it was a combination of a few things, because this high growth is on top of the growth we had the previous year. So we had 2022 and 2023, 8.2. Now, as you said, it's like around 9.2 for 3 quarters. We are waiting for the 4th quarter data. But what we are seeing in the 4th quarter is also likely to be high. So most likely we are going to have a growth rate for the year 2024 that's likely to exceed 8.3, which was the forecast we had recently. But the detail will be published by the National Institute of Statistics in the month of March. What's driving this growth, we are seeing mainly services. Services, as you know, is close to 50% of our GDP. And we had very high growth in sectors of hotels, restaurants, and tourism-related services. We also had financial services, ICT, and the like. For industry, at the beginning of the year especially, we had construction activities ongoing, but the manufacturing sector has been growing at a good pace throughout the year. The thing that is new in the year 2024 compared to 2023 and even a bit 2022 is that we had good agriculture. So this adds on top of the rest. So you can imagine we used to have 8.2% economic growth with a bad agriculture. So now with good agriculture, and that's why you see this growth going to 9.2, etc. This is for the year 2024.
Still looking at the numbers, traditional commodity prices, we've seen you had touched on, they remained relatively stable, to an extent, some even being above historical levels. Take us through Rwanda's merchandise trade deficit. We've seen it has also improved.
Yeah.
Take us through the numbers.
Yeah, so we have two sets of numbers. So if you look at the entire year, the trade deficit actually deteriorated a bit. But if you focus on the last quarter of the year, we see some improvement compared to the beginning of the year 2024. It's coming from, we had more than 15% increase in exports in the last quarter of the year. And we had a small growth in imports, which is, I think, 3.3%. So if you put them together, the trade deficit narrowed. So it means that since we have a deficit, it's negative already, but this negative is less negative, let's say it that way. And this is a good thing, and we hope that this will continue. If exports continue growing much faster than imports, our trade deficit will narrow. And the reason why exports have to really grow much faster is because imports is almost the double of export. So it needs to grow much faster, if you want. We have... in the past few years, we've seen diversification of our exports, which used to be mainly few commodities, what we call the coffee, tea, and the free teas minerals, which we call the traditional exports, towards more what we call non-traditional exports made of manufactured products that go to the region and elsewhere. This is many things, cement, foods, manufactured foods, beverages, it's a lot of things. So this component that's non-traditional is the one that is now, the beginning of the year, the growth was quite slow there. And at the end of the year, we saw a significant increase in these categories of export, which is, we believe, if it continues like that, is the solution to reduce our trade deficit. It is products that are made in Rwanda from the manufacturing sector and that are exported. And the more we are able to produce them, the more we'll be able to export at the same time to reduce the imports that we are having. So the trend, looking at the last quarter, is good. So let's see how it moves, how it goes in the coming months.
And also, does that have a role in strengthening our local currency? And also, if you can talk to us about the trends that we have seeing on the forex exchange markets comparing to the previous years.
Yeah, it does have a role. So the more we see this kind of trend, and actually what you're likely to see is a reduction in the speed at which our currency is losing value, means the depreciation. Especially I'm comparing it with the US dollar. So the US dollar is the main currency that's used for importers to buy goods outside Rwanda. And the US dollar is the same currency they get when they export. So you'll see then that if this positive trend of narrowing trade deficit, or at least reduction in the speed at which trade deficit is increasing, this will help significantly reduce the pressures on the exchange rate. What we've seen in 2024, on average, at the end of 2024, is that the depreciation of the Rwandan franc was 9.4%. Compared to the year before, 2023. But in 2023, the depreciation was 18%. So you see that it's half of it, meaning that there's normalization happening in unusually very high depreciation in 2023, coming from these pressures, partly on the exchange, from the trade deficit, which we saw is lower pressure in 2024, and we expect even lower pressure in 2025, meaning that we expect the exchange rate depreciation to be less than that. And if that continues in that trend, because solving a trade deficit issue is a medium to long-term issue, it's not something that can be solved in a very short term. But if the trend continues like that, then we are likely to have a slow depreciation, coming back to sort of a normal depreciation for our economy, where an economy which would, for the moment, need imports. So basically, a depreciation of 5% is quite normal in our case. So we see that we are going gradually back to that, which is also an historical average, maybe in the coming 2 or 3 years.
Interesting. And going back to a conversation that has been in the airwaves, we saw the adjustments that were made by the Ministry of Finance and Economic Planning on some of the introduction of tax on different things. Also, towards the end of last year, we saw RSSB, also the adjustments that were also made. So one just wonders, how is this going to impact consumer trends? How is it going to, will it have any impact also on inflation? Is it something that could be factored in the near future?
Yeah, all these adjustments in different policies speak to each other. And of course, when we look at the economy at large and the inflation, we have to factor in the impact of all these different things. There were different reasons for that. I think it was explained for RSSB. It was an issue related to sustainability, long-term sustainability of the pension fund, and ability to increase benefits for some of the people. Now, when it comes to the new taxes introduced recently, that was also the objective to raise more domestic revenue from on the government side, and which is very important, because when you want to develop, you have a development agenda like we have a Vision 2050 and NST2, you need resources for that. And the resources come from the government resources come from taxes first. This is it's like our own domestic revenue as a country. And then after that, you go look for borrowing. So you see that basically to finance development, you also need to raise your domestic and not only count on increasing borrowing. So we need a balance there. I think that's the exercise that was done by the Ministry of Finance. Now, coming back to us, how are we involved into that? We usually work very closely with the Ministry of Finance and other institutions, and we try to put together do simulations, impact of different things. And when we were looking at it, we did not see that these particular taxes would impact our inflation to the level where it goes well above what we see as a target range. So this is why we're saying, even with all of that, we are looking at 6.5. For us, 6.5 is still fine, so we are maintaining the rate. That's the logic, at least, what we are looking at. Then in the future, if other things happen, or if something else do not work as intended, or if there's a surprise, then we need to look at it again, the impact on our inflation, and then advise, because we also advise different government entities and say this policy could be adjusted, or for us, we will need to adjust monetary policy. So that's how we work together.
And on the financial sector side, how are we seeing things?
So while we do the Monetary Policy Committee, we also do the Financial Stability Committee, in which we look at all these metrics, which are the banks and microfinance and insurance and others have enough capital, do they have enough liquidity, and actually are the loans that are taken being reimbursed. This is basically the NPL. And if you look at all these three types of indicators, the financial system as well is sound and stable, where we did not see any major issue in this past quarter. But of course, there are also risks that we discussed there, cybersecurity risks and possible climate change-related risks that we are monitoring. But overall, the financial sector is sound and stable, is profitable. We saw good numbers in terms of profitability of banks, and yeah, I think there's no issue to particular.
And for the insurance in particular, like even with the adjustments that were put in place by the Rwandan Social and Security Board, how are we seeing the numbers looking, and what are the projections for this year?
You mean for the pension sector or for the? Okay, for the pension sector, yes, it's part. These contributions are going to. We have the public pension fund, which is RSSB, and we have other private pension funds. So for the public sector funds, these contributions are going to, of course, we expect to see a positive impact on their numbers. But since the reform started in January, we have not yet put the numbers together. So probably the next FSC will have these numbers and start commenting on them. But we expect a positive impact on them.
And for the insurance sector, there's a time we had a conversation about, and the conversation was around adjusting and also creating different packages. For example, if it's climate change, looking at the different areas, how are we seeing the insurance sector adapting with the current needs on the market? How are we seeing it being the adoption happening?
Yeah, that's a challenge not only for Rwanda but for many developing countries, where what we call the insurance penetration rate is very low. Apart from some of the mandatory insurance, the car insurance and things like that, we see less appetite, or let's say products being take up of some of the insurance products on the market. So recently there's been discussions with the insurance sector where the central bank also participated to try to see what can be done to improve on that. I believe they are done with their consultations, and they probably they have a list of reforms or possible activities they can do to try to work on that. But this is let's say, a structural issue that will take time. It's also something that we need medium-term actions that will take that will have an impact in the, let's say, medium to long term in terms of penetration of insurance for the population in general.
Okay. As we wrap up, how we foresee 2025 performing? You said numbers for Q4 will soon be released. Generally, how are we seeing things aside from the inflation part?
Yeah, for the economy in general, we expect good growth. What we were projecting a couple of months ago, together with the Ministry of Finance, was 7% growth for 2025. But this is also something that we may revise, because now, as I said, we're going to have Q4 2024 data, and we'll have the entire year 2024 data. With that, then we'll have some other information that will help us revise, if necessary, this number. But for the moment, a 7% growth is actually a good growth if you look at what's going on for Sub-Saharan Africa in general. And for Sub-Saharan Africa, growth I think is around 4%, 4.2%, and global growth is around 3.3%. So we are still in East African region having very high growth, but Rwanda specifically is still having high growth compared to the rest of the world.
Well, that's all we had on today's episode of The Business Age. Thank you so much for tuning in. We're having a conversation with the Chief Economist at the National Bank of Rwanda, Dr. Thierry Karisa. You're with me, Naingwa Fiona Muthoni. Until next time, stay well.